Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Thursday, August 25th. U.S. stock futures are pointing to a mixed open on Wall Street after a late rally yesterday boosted the major indexes to their third straight winning session. Investors are digesting the weekly report on initial jobless claims, and we'll bring you those numbers after the opening bell. But all anyone seems to be talking about is Steve Jobs' retirement. Apple's co-founder and CEO sent a letter to the board of directors saying he can no longer meet his duties. Jobs has battled several illnesses in recent years. His longtime lieutenant and former chief operating officer, Tim Cook, will replace him. Jobs will remain involved in the company as chairman of the board. Shares of Apple are dropping nearly 3% on the news, but analysts say Jobs' eventual resignation had already been priced into the stock.
Jobs' resignation is having a ripple effect across the entire technology sector. The tech-heavy NASDAQ composite is set to open modestly lower, while Dow and S&P 500 futures are pointing to small gains. The generally positive mood on Wall Street this week is mainly due to anticipation of a speech by Fed Chairman Ben Bernanke tomorrow. He will address the annual gathering of international central bankers and economists in Jackson Hole, Wyoming. Some Fed watchers had been hoping for him to signal a third round of quantitative easing, but those expectations now seem to be fading. Analysts have been growing more pessimistic about the global economic outlook, and now Citigroup and UBS are joining the chorus. Citi now sees global GDP growth at 3.1% this year, down from 3.4%. And for 2012, it lowered its forecast by 0.5% to 3.2%. UBS expects similar growth for next year. However, both firms ruled out the possibility of a recession for now.
Worries about the economy have largely taken a back seat this week as investors look forward to Bernanke's speech in Jackson Hole. That shift in sentiment has prompted a sell-off in gold after it closed at a record near $1,900 an ounce on Monday. Today, that selling pressure is only growing after exchange operator CME Group raised margin requirements for the second time this month. Gold is now trading at less than $1,730 an ounce, down more than $160 from its peak. Quickly checking in on the other asset markets, oil prices are modestly higher, now trading close to $86 a barrel. Meanwhile, the dollar is mixed against its major rivals, and treasuries are holding steady after their biggest decline in 2 weeks yesterday. The yield on the benchmark 10-year note is now back above 2.3%.
In addition to Apple, we are keeping an eye on several other stocks this morning. Staying in the technology sector, Applied Materials is tumbling more than 5%. After yesterday's closing bell, the chipmaker reported a huge jump in its quarterly profit, but that's being overshadowed by a weaker than expected outlook for the current quarter. Applied Materials says it's seeing slower demand for its products. But one stock that may take off today is Boeing. The jet maker got an order for 100 737 aircraft to be delivered between 2013 and 2018. Traders are also awaiting earnings from Hormel Foods and discount chain Big Lots, among several other food and retail companies. We'll tell you which reports are moving the markets and bring you all the economic data after the opening bell.